Welcome to the Trading Lounge and the Day Ahead Report. Here we're just looking at the NASDAQ, the tech stock actually, and similar, same but different. But the main point is that this correction across here, this is probably a bit of Richard Wyckoff's work, really. He's the one that established the relationship between price and volume. He was in the sort of 1880s to 1930s, somewhere in there. So he basically says in a bit of a nutshell, sort of unit for unit, the accumulation process through here in terms of the accumulation would equal the distribution to the upside here. So and I also look at it as a really good sort of foundation for the next trend as well. It will be facing the 2800 here, but it's kind of ready to move along here now. So that's obviously going to help the US markets as well. So the Dow Jones here is still struggling with the 14,000 here, as you can see, but we do expect it to move higher. The bonds and US dollar haven't turned down from their rallies yet, because they'll be moving in the opposite direction, of course. But look, anyway, that's nice and tidy, sort of sitting in there as such. And here it is here. Once again, the S&P 500 has moved up here further, so we can assume that the triangle pattern here is completed. But the other, excuse me, the other main point here too, in terms of pattern recognition, is this particular three-wave pattern here, and that's there's a handful of things when using Elliott that are just really valuable, and one of them is just simply understanding that in a bull market, having a correction in three waves tells you that the highs will be taken out in due course. When we look at the S&P 500, this is a 4-hour chart here. You can see that it's moved along a little bit higher through there. So we can once again assume that this move here is the fifth wave moving up through here. This will be in 5 waves as well, in terms of the 1, the 2, the 3, the 4, and the 5. So that will go a bit higher from there. This is just it on 2-hour chart. So yeah, it should just continue pushing up there further. In terms of, do I have this on a smaller chart here? Yep. So you can see that these are the medium level here. The first sub-level, I guess, and these are micro levels here. So, but it's always the same as well. It's always the numbers 1, 2, 3, 5, and 8, and that's what we've got here. The 11, 12, 13, 15, and the 18 here. You can see those guys playing out through here. So that will just continue through here. And the next, obviously, the next target is up through here at the 1520 through there. So look, all positive, all going according to plan. It would be helpful if the US dollar did move to the downside back through the 80, but that hasn't occurred yet. We expect the US dollar actually to push a little bit higher up into 80.50 before we see it move back down below the 80 there, and in that time we'll see the euro find its low, but we'll talk about that in a moment. The Australian market at the 4900 here has moved off, and I was expecting as you know, through here we were looking at this as in 5 waves up here. So the 1, the 2, the 3, the 4, and the 5, so to speak. And then here looking for an A and a B and a C here before we move to the upside, but that wasn't the case. It must have been all wrapped up in through here. But the good news is that this even in this little structure here, you can see the 1, the 2, the strong third wave. So we're going through the 4th wave here, which may get a little bit more complicated into group 2 here. Once complete, though, we'll push up into the 49.90 sort of area, 5,000 there. But this would only be the 3rd wave. So we could look at this as being the wave 1, the wave 2, the wave 3, 4, and 5 up through here. So the S&P 500 should take this a little bit higher through here. The base metals are also supporting this move to the upside as well. But as I mentioned, that US dollar is still moving to the upside, so that puts pressure on the commodities. So let's just have a look at the copper and the dollar. Okay, the copper market here, as you know, we were looking for a bounce off the 372, which has come about, as you can see. The move up, though, from the bounce of the orange line there is pretty much in three waves so far. So you sort of see this 1, 2, and this strong third wave here. If we get a fourth wave here and a fifth wave here, if we get 5 waves here, then we'll see an A, B, C here, and then we'll see further upside. But if we only get the 3 waves to the upside, then that would be a corrective wave. So that means that this here would be an A wave, a B wave, and a C wave back down to here, and then we go to the upside. So, yeah, I don't really know. I can't sort of just figure that out just yet, but I'll work on that. But the positive news is that this wave 4 here is still above wave 1. So while this market is above, the 370, the 372, then it's all sort of positive here for the materials sector as such. So of course we should take in iron ore for that as well, and we should start tracking that. So I'll try and remember that and make a bit of an effort on that. But look, base metals, positive, good for our market, and commodity dollars, Canada, and so forth. The oil market is still working through its wave 4 here, and what we were considering here is, as you know, we were looking at this as being 5 waves down through here, and if that's correct, then we should get a B wave in 3 waves. It could be tied up in this move up through here, but we just thought that bit simplistic. Maybe we just need a bit more there. So we're looking for the B wave in a larger 3-wave pattern, which would be the A, B, C. It was B for the B wave here, and the C wave up through to here, and then another 5 waves down for this one to come. So we'll just keep an eye on that. If the 97 became the support, because that's obviously where the supply is, the sellers. If that became the support would go along there, and the reason I say that is because when we have, that's a 4-hour chart, when we have a look at Brent here on an 8-hour chart, you can see the Brent market just moving. It's moving up quite strongly, isn't it? So yeah, there's something obviously going on there that I don't understand. So I'm just mindful that that the WTI could just catch up with that spread there. So, yeah, the gold market is kind of hanging in there really in terms of the wave 2 allocated here. And the other thing that sort of helps sort of cement this psychologically for me is that the group 2 here, even though it hasn't rejected the group 2, it's inside the group 2 here. It's not like under there, but we were looking at getting a first position once the retest of 72 became apparent, and that's becoming apparent now. As you can see, it's retested and failed. So the short order here with the stop up through here, or at least at 1677 or 1683, depending on how you like to see it. And if the 1665 became the retested resistance, then you would add to a position there. You could cover close to the 1650 here off the low here, so 1653, 1655. You could start covering within that, but the longer term view would be to have this as the resistance here. But if there's going to be a bounce off here, then it's going to come back and retest into this zone here as well. And then work down from there as well. So yeah, either way, depending if you're taking, depending what your game plan is to be, build a long-term sort of shorter position, which takes a fair bit of courage really, because you see entries being retested all the time. You can have wheels within wheels going here, so if you were short a certain amount here, you could cover a certain amount here and look to add back in. But it's it's not always that easy to build a position and get in and out and build it that way. It takes a fair bit of discipline and a fair bit of detached detachment is probably a better word than courage, really. So silver, as I mentioned yesterday, could be leading the way down, and that seemed to be the case looking at this sort of area in here. And you can see now that the midpoint here, the 3150 is being retested there. So this is nice. This is basically down for 1, back for 2, down for 3, and back for 4, and down for 5 into the 31 area, maybe somewhere in here, and then we'll see a sort of a ABC retest and then further to the downside. So it's interesting seeing this happen here. And as I mentioned, I have the I'm just looking for the US dollar here as well. So you see the US dollar here is above the 80. So we're looking for an ABC up. That I haven't updated this, but that's over there. That's gone. And we're looking at this as a wave C to the upside. We're kind of looking at to go to 80.50 up here before it rolls over. But the point is being above the 80 there just puts pressure on the flip side of the market. So once this breaks down through here, if we have a look at the euro, it's a bit easier to follow as well. So the euro here on the 1 hour chart, as you know, we're looking for a ABC correction to the downside in terms of the A, the B, and the C wave down here in 5 waves, and we're just labeling it like this here in terms of the 1, the A, B, and C for the 2, the nice strong 3rd wave, the 4th wave, and the 5th wave. So the 5th wave can come down to, you can come into this sort of area down into here. So a little bit, you can count this in 5 waves to this area here, but we'll probably take this as wave 1, wave 2, and a bit more downside to come through here. So you could imagine that if the market does move down lower here to complete this little structure here, then if it finds support on the 133.72, then you can start to build a long trade from there and then onto the 34 as well, because we'll be looking for the upside there. But one of the catalysts would be to see the dollar, as I mentioned before, move back down. This is a dollar here, move back down below the 80. So yeah, look, if support is found on top of group 1 here, the 80.30, then we can expect the 80.50 to be done at that stage. But we are looking for it to unfold down from that point. But it may just do it from here. But this would be this as resistance. This as resistance is a trigger to be long in the other markets, the flip side of the market. So all good there. So yeah, look, that's finishing there, and as you know, the S&P 500 and the euro have a relationship together. So you know, this is moving down while the S&P is moving up. So they're not correlated at the moment, but they should pull back into line. We're just waiting for this to finish, and we'll look for the long trade from that point there. So we don't have the setup yet. We don't have the evidence of the low in. We don't have the evidence of the turn to the upside either yet. So, but a bit of patience here, and that should come about in due course. The Australian market, the dollar here, as you know, yesterday we were looking for wave 5. This is that little wave 4 that we're looking for. So wave 5 is coming to play now. So we can see that that's the strong long, the what's his name, the 3rd wave here, the little 4th wave here, quite similar to this one here. And you know, most markets have about half a dozen patterns. Those half a dozen patterns are just reoccurring patterns. They can be small like this, or larger like this, or even larger still, of course, but sort of same personality within those patterns. And those patterns can also get skewed as well, so they could be slightly skewed, and they normally get skewed around, well, price points have carry different weights, so they can get skewed in that way as well. So look, after this 5 waves down that we're looking at here, we're looking at an ABC correction. So we're looking at this probably being the A wave to here, a B wave with a retest into the 103 area here, and then the C wave up through here. Now, the C wave up through here, once that's completed, then we should see it turn to the downside again. Now, that C wave up there will be in 5 waves, because a B wave is always in 3 waves. It can be this one here, a little bit small. but B waves are always in 3 waves, and C waves are always in 5 waves. The A wave here can be in 3 waves or 5 waves. So what we've got here, for instance, is we've got this little wave 1 up here and wave 2 back, and then we've basically got the wave 1, 2, 3, 4, and 5 here. So that could be the A wave in terms of an A, B, C here for the A wave, or realistically it could also be the top of a 3rd wave as well. So this would be the 4th wave here and a 5th wave to here. So it would give us 1, 2, 3, 4, 5 here for the A wave at this point. That's an option. It's not our first option in this case, but it is an option. And then we would get an A, B, C back again, and then the C wave up. But we'll know once it matures a little bit. But the point being is that after we get our A, B, and C through here, then that price will move down a bit. So it can be a bit tricky navigating through an ABC, but the way that we can do that is that if support is found on top of 103.30, the top of group 1, well, then you can trade up to the next level, take your money, wait for it to become support again, and then move up. In this case, take the money at 65 in part, the rest at 72, wait for 72 to become support, then move back in top of the 80, maybe take some little bit of profit at 90 and the rest at 104, and then wait for any sort of reaction at that point there. So it's a bit of a game of snakes and ladders, and that's why money management is important, because you just don't know when you're going to get a snake in the on the board, so to speak. So you need to protect what you've got. Protect your asset is the first rule of investment. So that's it. Enjoy the weekend, and I'll speak shortly.